Dylan Jones-Evans. As well as being a professor of entrepreneurship, I'm the founder of the Startup Awards National Series, which we launched last year with over 2,500 entries, resulting in 900 finalists, which collectively were generating 300 million in turnover and employing over 5,000 people, which isn't bad for a group of businesses less than 3 years old. We're launching the search for the best UK startup in 2023 soon, and I'll be visiting 10 cities along the way to celebrate new businesses in every corner of the nation. We're working with brilliant partners such as BT to help create a vibrant startup community in every nation and region, and it's great to have you all here today. So this is the first in our webinar series, and I'm really delighted to welcome Sam White to join us this morning. Welcome, Sam.
Thank you for having me on, and I'm super excited to hear about the PhD in entrepreneurship. I mean, that's very exciting.
That's 4 years of my life I'll never get back. So, so let me tell you a bit about Sam. Sam set up her first business age just 24 from her sister's conservatory, and she hasn't stopped since. She started a small uninsured loss company in 1999, and since then she's grown the Freedom Group to become a hugely influential and expanding business. And in the last 2 decades, she spearheaded the growth of a dynamic company in an ever-changing sector. And we were just talking about the changes in the insurance sector before we came online. And more importantly, she's maintained this strongly principled approach to business. I was saying to Sam that my dad actually had his own small insurance business in the small seaside town of Pwllheli for over 40 years. So I'm really looking forward to this conversation with someone who's made a real difference in so many ways through a business. And we won't bore you going into the sort of nuances of how insurance companies work out policies.
God, no, that's you'll watch the participants start to disappear off to other webinars if you start talking too much about insurance, Dylan. I think your dad threatened you, didn't he? Your dad threatened you to if you didn't do well at university, you'd have to go and work in the family business.
Absolutely. So let's start, as Julie Andrews famously said, let's begin at the beginning. We'd like to know a little bit about you, Sam, and your entrepreneurial story, because your starting point, your journey to date. Tell us a bit about yourself and how you got where you are today.
Yeah, I mean, I'm pretty old, so 24 when I started out, which was 23 years ago. So I have to rattle the memory boxes to go back that far. But I think even at school and at university, I just didn't like other people telling me what to do. So I kind of always knew that I'd want to do something for myself. And whether it be good luck or good fortune, I had the opportunity when I was younger to play around with little entrepreneurial stuff. So I washed cars in the local neighborhood to make my beer money, which I probably shouldn't have been in the pub at the time because it was probably when I was about 15, 16, but we won't talk about that. And I also had sort of jobs in sales, etc. But after my first proper job, I knew I was like, I don't want to do this for somebody else. I want to do this for myself. So I decided to start doing some, I guess you'd call it consultancy work now, from my sister's conservatory. And in those days, and you may remember this, Dylan, the yellow pages was and we didn't have any data protection rules. We didn't have, this stuff that you had to kind of be careful who you phoned. You could just literally pick up the phone and start calling people and saying, would you have a conversation with me about X, Y, Z product? And I ended up getting involved in motor insurance claims of all things and working in conjunction with a couple of people in the industry. And it just really grew from there. So it was very much an organically grown business. And I think you mentioned before, as part of your studies, that there was 2 types of entrepreneurs, which I was fascinated by, the craftsman and the opportunistic, I think. Yeah, I was definitely opportunistic. So for me, it was always, well, what do I have the skills and the resources to be able to achieve? And where does that opportunity sit? And I just kind of followed that trajectory over the years. And now we have over 250 staff in the UK businesses, 240 in the UK businesses. We'll probably turn over 20 odd million, decent profitability, but there's been lots and lots of roller coasters over the way.
So what do you think have been, over the last 20 years, the key factors in the success of the business, this business you've grown to over 20 million over that period?
Yeah, so I think there's always turning points in the business, and normally for me that would be a platform client, somebody that was prepared to take a chance on you when you weren't quite big enough for them to be doing business with you, but they were happy to give you a go. So probably the first sort of 5 or 6 years were quite a slog, because the challenge that you have when you're growing organically, and I did struggle to get funding very much in the early years, is that you can't bring more people in until you can afford to pay them. And so I was constantly sort of chasing ahead of myself to make enough revenue to be able to pull in the next person that could take something off my plate, so that I could then go and find the next opportunity that was out there. And then I hit a tipping point probably when I got to about 30 staff, and I had a proper office, and, you know, we'd got that infrastructure in, that I really could go out and land opportunities that weren't afforded to me before that point. And I think it's easy to forget how hard those early years are. And I mean, I love a startup. I set up in Australia a couple of years ago, and it does take you right back to that sort of initial instance that you're not moving, you're not getting as far forward as you want to start with, because it's just such a grind. But I think the one thing that I would say to people is that you have to just stick with it. And I was always looking to replace myself. So when I first set up, I was doing everything. I was on the yellow pages, I was phoning the customers, I was getting them on board, and then I was handling the claims. If the claims then came through, I was then, building the accounts and the invoicing. And at each stage that we got a little bit bigger, I would then try and pull in somebody to take over one of those elements so that you could move out a little bit further.
Yeah. And also what I'm finding fascinating about this is that it is how do you move from being in the business to on the business. But as you went through your business, what do you think were the biggest challenges you faced in that? Obviously, you said the beginning, and we asked this about all our fast growth companies. What were the main challenges? And the two that you describe is finance and people are always the ones. What other challenges did you have as you grew the business?
Well, the other thing is you don't know what you don't know. And I was 24. I'd never worked in a corporate environment. I've never had a job. I do joke and say that I'm unemployable. I find corporate structures and corporate organizations quite bizarre, if I'm honest. I talk about this a lot. It feels like people are playing make-believe and pretending, that there's a lack of authenticity that I find in most corporate environments that I really struggle with. But at 24 and then, even at 30, each time the business got bigger, I was trying to learn what might be needed. And there's this balance between what exists around you and what you can find out. So I would have mentors that I'd reach out to that had bigger businesses than mine and say, look, I'm at this stage, I'm having these problems with people or resources or whatever. What do you think I should be thinking about? And they might say, you really need to get a HR department at this point, or you need to look at XYZ resource. So there's a balance between, okay, how do other people do it? But also finding your own path within that growth cycle to go, well, I don't actually have to do it exactly the same as everybody else. If I believe that the existing method of doing things isn't necessarily the right way, what bits can I own as my own, and what am I prepared to test and learn on? And, I always say to the team, and I've always kept this, is it's okay to fail, just fail fast. So, test that new idea, test that new structure, but if it doesn't work, get rid of it and move on to something else.
So building on that, we always think about entrepreneurs as being these enormously confident people who are always successful. And you say about this failing fast issue, which is obviously the way to do it. Now, you've been in business for 20 years, right? maybe this is the wrong question to ask, but what do you think has been your most significant moment of self-doubt during that time, and how did you overcome it?
Yeah, so I mean, 20 odd years of not selling the business, and I know that a lot of this is about when's the right time to sell. I've had over the years a number of times where we've hit a peak. So I started off being what you'd call a claims TPA, and built that business up to a significant size just doing that. And then there was a massive change in the market and a regulatory change in 2013, and I lost 60% of my revenue lines in a 6-week period. So I went from, I think at the time we probably had a couple of hundred staff down to 60. Overnight, I had to kind of shrink the business to be able to deal with the lack of revenue, and that definitely did knock me for 6, because at that point I had got I don't know if there's a terminology for it, or you came across it when you were doing your research, but yeah. I call it the arsehole years. In that
I must remember that from there.
Because, you know, at that point, everything had gone well. It'd been hard, but we'd always got bigger. We'd always got more profitable, to the point that I was turning over millions of pounds, making a load of profit. I moved to Beverly Hills because I thought, yay, look at me. I'm doing these amazing things.
Can I just stop there? Who's living next door to you in Beverly Hills?
Charlie Sheen, which is a whole other story that you do not want to. Not for this time in the morning, after the watershed. But yeah, it was insane. It was a great adventure. But I definitely had an overconfidence at that point that, you know, anything I did would go well, and that was a kind of crashing to the ground. Maybe I'm not as good as I thought I was. Maybe this is going to be the end of the adventure, and it's going to go to this and pop and be done. But you know, you find solutions, you pivot, you take stock, you move forward, and I managed to move on from that point. And then the second time that occurred was during COVID, where we just sort of seemed to get battered by circumstance after circumstance. It was equally as sort of critical, but I don't think it hurt as hard, because I think business-wise it's probably like romance. The first cut is the deepest, when you kind of have that rude awakening that things can and will go wrong to an nth degree, and you've got to kind of work your way through it. Good.
So we had a short chat before we went live about this thing which we call founder's disease, which is this fear of letting go of the business. But you seem to have come to this point, you know, in your entrepreneurial journey where it's relatively straightforward. You seem very comfortable. Tell us how you got to that mindset, because many owners don't even think about an exit, but never mind actually get to a point where they're going to do it. And we'll talk about a bit more about the handing over the business later, but just about the mindset to begin with, how you got to that stage.
Yeah, so I think there's a couple of things that have probably helped me with this. And let's be clear, I've had this business for 23 years. So really, I think it would be fair to say that I should have got here sooner. And, you know, on reflection, I do look back and see things differently to the way that I saw them in the past. But after the sort of near critical event in 2013, I then pivoted the business by setting up another business. So I moved into insurance rather than just claims, and set up what's known as a managing general agency. So I set up an underwriting arm so that I could move into a new area, but also feed the existing business. When that went well, I think that made me feel a little bit more confident, in the sense that it was like a new startup. So I knew that I could build. It didn't just have to be the first business that I was involved in. I could build other businesses, and then I built a brokerage on top of that as well. And so it gave me that kind of full change. So there was a confidence in that, okay, I can build other businesses. But then I think you also get to the point where you realize that in order to move forward, you have to let go. So the thing for me is you've only got a finite amount of time. You've only got a finite amount of resources. If you can release capital, if you can release time, is there anything else that you are more passionate about or would like to be involved in that you can't be involved in because all of your time and your energy and your finances are embedded into whatever the business is?
So do you think you always had, as you said, maybe you should have done it earlier. Did you always have an exit in mind eventually?
No, absolutely not. So, when I first set up, it genuinely just was, how do I pay the bills and not have to get a job? So that was
28 years later, you're still there, right?
Yeah, exactly. I was just kind of in this, I don't want to have to work for somebody else. So how do I make enough money to do that? And then when it starts to become successful, that in itself can be quite intoxicating, and you can end up in this lifestyle business dynamic. And I think one of both the great opportunities and the things that held me back the most was this lack of funding. There's a discipline that comes from getting investment that I think when you've organically grown, you don't have. You have other people around the table that are also, they put their capital in, they want to see a return for their capital. And so those conversations around exit are driven much more keenly from a business that's raised money to start up than from a business that's organically grown. I mean, you mentioned your dad had his own brokerage. Did he ever even consider?
No.
Because it's part of his life, and it's almost becomes like another member of the family that is kind of embedded in, and there isn't really anyone else challenging that perspective.
And that is fascinating, isn't it? Because one of the things that you see these days, we have this thing called serial entrepreneurs, which people start their business, they grow it within 7 years, they exit for a lot of money, they start again, and they start again, and they go through that same cycle. Whereas obviously, and to some extent, as you said, a lot of that, or the exit itself, is driven by external financiers who want to get a return on their money within 5 to 7 years. And you're in a very different position to that.
Yeah.
Okay, good. So what also I'm keen to talk about is this great article that Hannah Previs wrote in the Times, which I suppose you bared your your intentions, as they say, about this, how you brought in your own psychologist to run a business. Somebody said that would be crazy, but that would be the sort of wrong thing to say when you're talking about your coach. But it is, it's a great read. If you haven't read it, I think the team will send this around later. But I'm really fascinated for you to go through this. Tell us about what happened and the thinking behind the process, because there were those who advised you against it, but it seemed to be a radical move that somehow has turned out to be the right move. So if you can tell us about that, that would be really fascinating.
Yeah. So, I mean, firstly, I love psychology. I'm like an avid reader of every psychology book you could ever possibly imagine. And I did actually do a psychology degree at university, but I loved business as well. And so for me, that was a better path for me. And being brutal, the money that you could earn as a psychologist wasn't particularly exciting for me as a young person that had aspirations to go and live in Beverly Hills at some point and behave like an arsehole. So I've always had that sort of stream running through. And I also have always been very aware of the fact that if there are any problems in the business, they will be problems that I have in myself. Whoever the ultimate leader is of an organization, the failures that run through that organization are likely to be to do with your own behaviors. And I don't think that you can properly assess what those behaviors are without really digging deep. And I think most businesses operate very much on the surface level. They're like a very superficial romantic relationship where everybody kind of pretends that everything's fine and, oh, you look nice and we're going to go out to dinner and what have you. And businesses can be very much like that. There's no real emotional intimacy, and it results in a level of dysfunction. So I've always kind of tried to shine light into my own dark corners to work out where my behavior could be affecting the business, because as the leader in the business, even the slightest movement has a huge impact on the overall organization, because and particularly in a founded run business, you're wielding an inordinate amount of power. And so if you get it wrong, it can be quite destructive. And you talked about the challenge with entrepreneurs and founders disease. That there definitely is an issue, particularly in our society, where we hold up this idea about CEOs being, like godlike figures on pedestals that have all the answers, and you're going to drive people through crises and manage this. And we do the same with politicians. There's going to be this magic unicorn that's going to solve all the problems. And the reality is that problems aren't solved by individuals. Problems are solved by groups with, a single point of purpose and vision, and really kind of engaging together and playing together. So I'd had a coach working with me personally for a couple of years where I was trying to kind of get me into the best possible space to be the best leader I could be for the team. And I had a couple of senior leaders working alongside me during that process, and they tended to be your quite typical corporate insurance people, and the two kind of methodologies were grinding against each other a little bit in terms of what we were trying to achieve from a psychological well-being perspective. And me as a leader, I had to acknowledge I'm not naturally a team player. I tend to be, I want to go off and do that. I mean, I'm going to go off and set up a business in Australia. I want to do that. It's, and you're trying to get people to catch up with you as opposed to being fully embedded in the journey. And the more I was engaging with this guy, the more I realized I wanted to get him engaged with the team. And so I started him coaching the whole of the exec. Wow. And that produced some positive results, but there was still this kind of disconnect. And eventually, I knew I wanted to step to one side. I wanted to get the team with the best possible dynamic. And it just made sense to me to have the coach the exec and truly kind of pass it over to the team to create the result. And it's been phenomenal. And really humbling and positive from my viewpoint, but really growth inspiring from theirs. And he just kind of sets the board out so that people play well together.
That's fascinating, isn't it? Because bringing in an outsider like that into a company that's been going for over 2 decades, I mean, it can either go, I've seen it in so many ways, it can either go one or two ways. It can actually be an absolute disaster because somebody brings in a very different, shall we say, culture from their own background and try and impose it on that company, or they bring this very different approach that has an amazing sort of effect that sort of revitalizes that business. I'm assuming it's the latter and the former.
Yeah, it most definitely is. And I would say the thing was, because he'd been working with them for 2 years, there was already a great deal of trust. There was emotional intimacy. He knew the people better than any manager would have known the people because of that coach dynamic. Yeah. And it just enabled him to kind of hit the ground running in a way that I've had other senior executives in the business over the years. And to your point, they tend to come in with a blueprint of this is what worked in my last place. And so I'm going to imprint this on this business. And it never was a good fit. It was always misaligned. Whereas Andy hasn't tried to do that. He's come in and worked with the existing culture, but he's just made it better. He's made the people feel psychologically safe, which then generates a different kind of performance from your people than a sort of traditional type.
Good. Just for those who are on the webinar, don't worry, I've got your questions and they're coming in, and please keep sending them in. I'll ask those at the towards the end when we've gone through some of the points that we want to make about obviously this interview. So what are you doing now? I mean, you know, how have you managed to leave your day-to-day responsibilities as, you know, the queen of your business? What are you doing with yourself? You know, how difficult has that been?
Yeah, no. So I mean, I'm obviously still involved. I've taken the role of chair. I still have regulatory responsibilities, so I make sure that I've got that oversight function. What I'm not doing is trying to make all of the decisions in the business, and you know, and to be fair, neither's Andy. He facilitates the execs making the decisions. He's not sort of, and that's one of the things he's taught me. I have a natural tendency to jump in too soon. As a problem, let me fix it. Like, you know, I could save the day, I've had to learn to kind of hold back a bit, and that's, you know, that's definitely still a process. But I've moved to that chair role, and I'm, you know, Andy would say it's flipped somewhat. That there's a little bit of me coaching him now, which is an interesting switch. And I've also got another business that I set up a couple of years ago in Australia, Stella. But I'm trying very hard to start that business as I mean to go on. And so the lessons that I've learned from Freedom, I'm trying to deploy in Stella from the get-go, so I don't fall into the same traps of the past.
Now, you've made this point. I was looking at some of the things that you've said about the business, and you know, being a female founder in a traditional sector such as insurance, even though we've had people like Hayley Parsons here in Wales have also been quite successful in the sector. But you said that the problems that many women face in getting a company up and running are mirrored in the exit process. What did you mean by saying that? And you know, what sort of challenges have you faced in that sort of role?
Yeah, so I mean, in terms of getting funding, it was just non-existent. I've got loads of stories. I had to get my dad to pretend that he was part of the business early doors so I could get an overdraft from the bank manager, and he was terrified he might actually ask him some questions about the business which he didn't have any of the answers for, but he was older and white and male, and I plonked him down, and it, you know, it did the job after I'd been refused a number of times. I think there's a deep-rooted issue. We talk about unconscious bias. I don't think for a second that fund managers or private equity guys are inherently misogynistic and they don't want women to succeed. I've watched the process play out both from a personal subjective viewpoint. I've got a lot of female entrepreneur friends as well who all have the same stories. And one of the things that I think is a problem is that the way that women and men problem solve, communicate, and just generally do things is quite different. And what happens, you know, when you're trying to raise money, what I find with women is, one, they tend to be more cautious. So they tend to go, what is the minimum amount of money that I can take in order to get this off the ground? And I'm only gonna put down on paper what I am confident I can achieve. And perhaps with their male counterparts, that is slightly different. And the problem is the market for borrowing money, exiting businesses, has all been designed by men for men, because that is who's been predominantly in there. So when you do get a female entrepreneur enter that space, I'm not saying that they're judged with suspicion, but you know, there's been plenty of evidence to show women, for instance, are asked preventative questions, men are asked promotion questions when trying to raise money. And there's something about the whole dynamic between the asker and the askee that is a disconnect, and whether, you know, there's a lack of confidence. And in all likelihood, there's a lack of confidence because they're almost speaking a slightly different language in the way that they approach things. And we haven't got enough female fund managers on the other side of the fence that are seeing things through the same eyes and the same lens and have got the same level of confidence. So I think the process in of itself lends itself probably better to male founders than female founders, but that is changing. And I am seeing encouraging signs that, you know, they're starting to wake up and see, you know, the returns from female founders are generally better, between 30 and 40% better returns. And that's usually on a lower raise. Now, I think we're starting to realize that just raising a load of money and not necessarily producing a return for your investors in terms of underlying performance is becoming less attractive to the market. And I think as a result of that, you are more likely to see a positive swing in the direction of female entrepreneurship.
I mean, we've seen this in that if you look at what's the culture in Silicon Valley has always been male orientated. Those are the businesses themselves, that the venture capital business being the same, and that's sort of spread out through the tech sector. And what I find even more fascinating now is that there's still been a focus on tech, but what you find is that some of the great profitable businesses are non-tech, and they're actually being run by women.
Yes.
And as a result, obviously, people, as you were saying now, the returns are better. And if you're a venture capitalist, if you're male or female, you want to go after those businesses that are going to give you the best return on your investment.
And that's
changing.
That's the thing that I think I used to get so frustrated by, because I mean, I chatted to a few of the banks. I didn't get CBILS from my existing bank during COVID, and it nearly took the business under. And we'd had a good year before, and, you know, there was no, and I was employing at the time, you know, a couple of hundred people in the Northwest. I just could not get my head around why we'd been refused. And I was seeing other businesses that had been accepted. But one of the conversations that I had was around delinquency rates. And it is apparently like one of the most unkept secrets in banking that women's delinquency rates on loans are far better than men's. And we go, of course, like, they're more responsible, of course, blah, blah, blah. But then I'm like,
somebody in the banking industry doesn't understand it. So
this is where I go, come on, like, I don't care if you don't particularly like me or you can't get comfortable with me because I don't fit your mold or the people you normally hang out with. But surely when you're dealing, particularly because you're often dealing with other people's money, then you would just go to the stats. Where am I going to get the best return? Who's most likely to pay me back? You know, and I can't see that much evidence over the years of that. And I'm just hoping that shift is happening now and people are being held accountable for the returns and the payback and everything else. And that I'm going to see this shift change.
Well, I've been hogging the conversation here, and I'll come back later. But I want to bring in some of the questions we've had from those on the seminar, which are focusing, believe it or not, on exit. So the first one, all these are anonymous, so I can't even say it. And I haven't written them, by the way.
Oh, this is worrying me now, Dylan.
So the first one is, could you cover the mental stress and anguish that comes with letting go of your baby stroke business? I imagine that's so hard.
Yeah, so I've got a couple of friends that are founders that sold their businesses, and I'm prepping myself. I'm doing all the appropriate therapy now because they generally say it hits after the sale's gone through. And I remember having a really interesting conversation with a friend of mine who exited about 10 years ago, cashed out, I think it was about £10 million. He was so excited coming up to the exit, and, you know, he got all of these plans and these things he wanted to do. And I spoke to him a few months afterwards, and he said, Sam, it nearly broke me. He said, you know, I went to sleep as a business owner and there was this sort of sense of purpose, and, you know, I knew what I was doing with my day. And then I woke up with some numbers in a bank account, and my whole sense of purpose had gone. So I'm very mindful of the risk of that. I think I've covered that by the fact that I've started another business before I've exited this one, because I know myself, and I don't want to retire. I have no desire to retire in any way. I'm hoping as part of the exit that the new owners will want me involved in some capacity, and that will be a conversation to be had. But I've already emotionally stepped back from that real sort of day-to-day controlling element. So I think it's in stages. You got to kind of work through most things in life bit by bit. What do they say? How do you eat an elephant? One bite at a time. So yeah.
Of course. So another question, and they said it's a silly question. I don't think it's a silly question, but in your opinion, what do you think are the main reasons to actually sell the business?
So I think what's really important is that you make any decision around your business around your life. So I think if I was just selling because I wanted a pile of cash, I think that would be a disaster. I think for me, yes, financial security was an element, and going through COVID and having, that second heart attack after the first one definitely made me think I want to take some risk off the table. I'm also newly married and planning on adding to my family, and there is lifestyle elements that I think are critical, but I think it has to be completely subjective for every individual, and it should be based on the kind of life that they want to have. They should start with that viewpoint. It shouldn't be just a zero-sum game. It shouldn't just be financial.
And obviously, you've been in the business for 22 years. Have you come close to an exit or a sale at any other time?
Yes, a couple of times. And at the time, I felt like it was another example of how difficult it is for women to get finance and also to do deals. I think with maturity, I have recognized that I probably didn't enter it fully committed. In that what I've done this time as part of the process is be a lot more structured about the approach. I got a proper corporate advisor to support. We've gone through a thorough process. We're not just what used to happen in the past is somebody would approach me and I think, oh, okay, yeah, let's have a look at that and we'll see how we go. And then you sort of get halfway down a road with one potential vendor and you've not really structured it properly, and you just end up in death by a thousand cuts in terms of trying to find a solution that suits both parties. So I do think there's a right way to go about the process, as well as making sure that it's the right time for you.
And what sort of advice would you have for people looking to sell their business? I mean, in terms of the timing more than anything else?
I think you've got to start from working out exactly what it is that you want. So do I want a full exit? Do I want somebody to come in and support me so I can supercharge the business to the next level? Am I happy? So for instance, people could say to me, the business is on an incredibly steep trajectory, positive trajectory at the moment. Why not wait until next year? You know that those numbers are going to be hit at a higher level next year. I think there's an element that there has to be blue sky for the person that's coming in as well. So working out what timing you're comfortable with and what the balance is there is really critical. But just having that clear idea as to what your tolerance levels are, really what number would you be comfortable with for an exit? Are you at the point that you can achieve that yet? And is it something that you want to do in a staged basis or have a full exit? I think is really important.
And not to get too technical about things like EBITDA and how you work this out, But I think it is important is, how do you actually value the business? Because there's a value you have, there's a value that the industry will have, there's a value the buyer will have.
Yeah.
How do you come to this decision about what your life's work is actually worth?
Yeah, and you can be quite pragmatic about it and quite clinical. A corporate advisor will tell you what the multiples are in the sectors that you're in. So, there's normally a range between X and Y of multiples of EBITDA within your industry. If you're a tech business over the last few years, then EBITDA might not be the valuation metric. It could be revenue. You need to understand in your own sector what the metrics are in the initial instance. And then I think it does come down to, again, the metrics could be a 12 to 16 times multiple, say. Now, you might say, I refuse to step off for less than 14 times multiple. That's my absolute minimum, because that's going to give me X number, and that's where I want to be. But there's things like employee ownership trusts, which we looked at, and unfortunately it didn't quite fit the funding model, but that could have been something that would have fitted culturally with where the business was going. There were certain tax benefits, and I might have looked at that and said, I'm happy to take a lower number to make that work, because it ticks these other boxes that I have in place. But I think it's one of the reasons that I think it is important to have somebody support you through the process, is that it is a process. There are sort of standard track and paths that people go down, and being in that area will enable you to have all of the options and also hopefully get a successful transaction away.
So another question here, I suppose, is the Dragon's Den question. So what if potential buyers are asking you questions that you should know the answer to, but you don't? So how do people, is there a point where, I'm sure that hasn't happened with you, but I'm sure you can empathize with that sort of approach?
No, to be honest with you, I think, again, it comes back to that sort of negative cultural element. You should, transparency for me is everything. Absolutely. If I don't know the answer to a question, I'm going to tell you I don't know the answer to the question, and I'm not going to feel bad about that, because you couldn't possibly know all of the answers that any people could ever potentially think to ask you. Any potential buyer coming in should want a measured response from the people that they are purchasing the business from. So I am also hoping to invest in other businesses as I release capital from this business. And I would have no issue at all with somebody saying, it's an interesting question, don't have the answer for you right now, let me go away and get that and come back to you.
Question from Tariq. I suppose you've answered this in the last 3/4 of an hour, but this point about entrepreneurship, is it addictive to you? Because obviously you've gone off and set up another company. You're not actually sitting with your feet up reading the latest trash novel, are you? Or watching the latest box set? Or maybe you are.
I was going to say, I definitely do that as well. And I'm into my audiobooks. You know what? I'll be honest and say, somebody said to me the other day, like, what will you do afterwards? And what's your most important criteria? Rightly or wrongly, my first criteria has always been that it has to be fun. We don't, we've only got a short amount of time on this planet. I don't want to be doing anything that is not enjoyable for me. Yes, you want to create value for yourself and other shareholders. And also, it sounds cheesy, but if you can do a bit of good as well along the way, then even better. And I think the first few years, I was definitely scrabbling for survival and trying to prove something to myself and make money. And over the last few, being able to, like, we partnered with Women and Girls Emergency Centre in Australia, and every time we sell a policy, we give $5 to them. So as we build, we're able to also support things that are important to me and the team building products that potentially have social good rather than just, you know, a transactional policy that you're making money out of. And that gives me a sense of purpose. And I think, you know, in life, there's lots of things that we do and connect with that gives us a sense of purpose. And for me, business is one of those things. And it has allowed me to have some adventures that I definitely wouldn't have had otherwise. And that's kind of key to my character and, you know, the way that I like to live. So yeah, setting up in Australia probably wasn't the most convenient thing that I could do, but it's been absolutely fantastic. And it appealed massively to my sense of adventure and, you know, the novelty factor and intrigue and everything else. And
over the last 20 odd years, what do you think the most important lesson is you've had from running your own business?
That nothing's fatal. That, you know, that there's always a way. Like the confidence that you get over the years. And I read a great article recently that I was saying that that's it now. I've got to be investable at this point, because apparently second founders generally are more successful. Apparently women are more successful, and older founders are also more successful. And I think so. I'm like, that's it. You know, it's the trio. But, you know, joking aside, I think the confidence that you get from all of those failures, and it's an accumulation of failures that you have over the years, to realize that it's never as bad as you think when you first get that telephone call that says, you know, you've just lost a massive revenue stream, or your key salesperson's going to a competitor, or you've just hit a global pandemic. Whatever the problem is, once you work through it and find a solution, the next time a problem comes up, you just feel that much more able to handle it.
And in terms of, we've got another question here, in terms of from your position now and some of the lessons or what you've learned really, how do you think business owners can ensure they end up in that place of financial freedom and well-being when they exit? Clearly, as you said, one of your friends was in that sort of situation where, you know, they felt that one day they were a business owner and then they just had a load of money in the bank. You know, how do you end up in a safe place where you can look back and say, I've done a great thing, but then look forward to the future?
I do personally think that is about personal self-awareness, and don't just focus on the business. Like, and if you make the business your life, then you absolutely will take a great deal of pain during the exit process. Arguably, you take a great deal of pain, full stop. Work still, for me, should be an enabler to a good life. And whether that be, I can take care of my family and my friends and have some adventures and, you know, go into other territories, then fantastic. But I think making sure that you are sense checking with yourself every step of the way. And I think a lot of business owners don't spend enough time on the personal elements of themselves and their psychology, because they're so driven from a business viewpoint. And I think you've got to lock that stuff down and get it right.
And another question is building again on what your experience is, but, you know, how difficult do you think it is to maintain a formal relationship with the business once you've left it? You've managed to do it by obviously carving a role for yourself in the business, but how difficult it is for people
You'll have to ask me in 6 months. I mean, you know, it will depend entirely on the capital that comes in. You know, and they may fall in love with me and want to have me around and, you know, like the energy and vibe, or they may go, you did a great job up to now, thank you very much, we've got it, we want to take it from here. But I think understanding, it's a bit like having kids. I've got 2 young kids at the moment. My sister's got 6 kids, and I've watched them go from young to teenage to adults. And at a certain point, you have to trust that they have the skills and, you know, accountability and everything else to be able to take those next steps. And I think my viewpoint would be that for me to maintain a relationship with the business after I've gone will involve an adult to adult dynamic with me and the exec and whoever comes in, to make sure that I'm not overstepping my boundaries in a new environment, but I'm still there as the parent that they come home to after university and say, this thing happened, what do you think I should do about it?
Yeah, I'm going through that now. So look, one final question for you. Looking back at this amazing business you built up, about your amazing career, and without even looking forward to the future, would there be one thing you'd do differently if you could do it all over again?
There'd be one thing I'd do differently. In honesty, I'm very happy with where I am now. So I'm very conscious of the fact that if I changed anything, I potentially wouldn't be in the position that I am in now. But I would like to have seen where I would be now if I'd potentially taken some capital out sooner, and maybe, done some exits earlier on in my journey and played the game slightly differently. Good.
Well, thanks very much. It's been fascinating. It's been lovely. I don't know where the time's gone. I had a couple of questions and I've ended up having about 20 of them and having this marvelous conversation. Are you in Australia at the moment?
I'm not. No, I'm in the UK. I'm in Cheshire. I was over in Australia last month. So yeah.
I was going to thank you for getting up so early or staying up so late or whatever.
No, I don't deserve the praise.
But thank you so much. It's been wonderful to hear about your experiences. I think, I'm sure as you said, you're ticking all the boxes for the second business. So I'm sure that'll be a successful. And thanks very much for being our first guest on this seminar and setting the standard for everybody else to follow. Thanks very much.
Hopefully everyone can improve upon the basis.
Thank you all. And thank you all for turning up. And we'll see you this time next week for our next Startup Summit in the BT series.